Hey folks, Bob Desmond over at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. We have some amazing charts to go over that I am really excited about. We'll talk about them in some detail, but before we get to the charts, let's first do a little bit of housekeeping, and that is membership is closed. We're not taking new members right now, so please do not sign up for the 14-day free trial offer. You won't be able to gain access. We're going to be replacing the sign-up page with a page that will tell you when there is open enrollment, when we're going to be accepting new members. Why are we doing this? The reason is this, is that we are building out the infrastructure. We are expanding the community aspect of the membership. We had lacked that in the past. We want to have far more engagement amongst members. And while that's going on, I want to be able to focus on delivering value to new members once we open up. If you're interested in becoming a member, just enter your email address anywhere on the website, and we'll treat that as an expression of interest that you are considering becoming a member when we do accept new members. We're going to set a membership goal of 750 new members, 250 gold members, with the remainder 500 being silver membership levels. So once we do reopen enrollment, you're going to have to act really quick because there is a lot of interest and those spots will fill up quickly and we will shut down enrollment once again. Okay, how was our week last week? Let's talk about the swing trades that we just knocked it out of the ballpark with Amazon. It was up huge last week, but we decided, you know what? The day of earnings, we decided to get short of Amazon. What did we do? We used the November expiration 1050 strike price puts, meaning we bet that the shares of Amazon would decline on earnings. And why did we think that? Well, Facebook had announced the evening prior, and the shares were selling off the highs of the day the next day, and Amazon at the same time were trading well above the 2 standard deviation Bollinger Band in green, nearing the red 3 standard deviation Bollinger Band. Very overbought. And when you take a look at the 15-minute chart right here, this rally up and into earnings was unsustainable, so we expected a sell-off on earnings. But little did we know that we would get the sell-off right away. I mean, we executed the trade and the shares just fell apart. So we made a quick 10% on Amazon using the put options, a very nice swing trade. What else did we close out last week? CMG, Chipotle Mexican Grill. Initially, we took a loss on this trade. Right back here on this bearish reversal day, this is a daily chart, the company reported earnings on the 25th. I sat in on the conference call, and I was not happy with the answers being provided by management with regard to their health concern issues. So the next day, we rallied, yet reversed on the day. First out, best out. We took a small loss, very small loss, and the next day, we saw a reversal bar, and I said, you know what? Let's get long once again, 15-minute chart, and the shares ripped. So we made our money back from the loss, plus a few dollars, a couple of percentage points. So a nice swing trade there. We moved out of the position. What else did we book profits in last week? BETR, Amplify Foods. I went over this one with members several months ago. What we were looking for was a breakout of this consolidation, this triangle formation, and we got it. And we opened up a position, and the shares have just ripped higher, daily chart. Now, why did we also get involved with the stock besides the fact that the technicals were setting up nicely? The fact of the matter is that you had a ton of shorts that were very, very complacent. They had big profits. They were not taking them. The shares trade on average 200, 300,000 shares per day, and you had a couple of million shares held short. So that's a multi-day short squeeze, which I think has quite possibly run its course. Now, might this set up on a pullback for a longer term investment? Sure. But right now, I think the path of least resistance is to the downside. We'll watch it to possibly get long once again. But we have since closed out the position, moving on to greener pastures. So a really good week last week for our shorter term swing trades. Our longer term core positions in the gold mining names did outstanding. I will talk about those names, our positions with members, on the week ahead commentary coming out later today. Let's move on to the stocks briefly that we are watching for the coming week. AMCX monthly chart, we are breaking out. Does that mean that we want to buy it on Monday morning? No, it's a bit extended on a daily basis. We're going to allow it to consolidate. Then we'll look to get involved. Members will get an alert when we do execute the trade. We will continue to watch it. I will provide more commentary on AMCX. Looking really good as a long-term investment, not a short-term swing trade. Next chart up. AMX, America Mobile. This is one I've been watching for a while. I've been looking for an opportunity to get involved. The shares are doing quite well this year, and I think we have our opportunity. This is a short-term continuation breakout trade. We're setting up a bull flag formation. We'll be looking for a breakout and then looking to open up a short-term swing trade to the long side. So AMX looking strong. Members, we'll talk more about these names in greater detail either today or on Market Wrap this coming week. BABA, the next stock up. We are in a triangle formation. This is another continuation breakout trade. I like the setup on both a daily and weekly basis. So members, more to come. Electronic Arts. We are in a triangle formation. This is another short-term continuation breakout trade. We flashed a bullish key reversal off of the lower band of the rising uptrend channel. Very bullish stuff. We'll be looking to buy on a breakout probably this coming week. Facebook. Now, I have my concerns about Facebook and the FANG stocks, especially since you saw VIX hit an 8 handle this past week. However, while I do have my concerns about Facebook, those concerns can be alleviated by a successful breakout of this triangle formation. So I am not long now. I will not buy the shares on a breakdown below this support level, unless, of course, we get a bullish key reversal off of the lower band of support. So this is a trade that is being watched right now. There are a couple of scenarios I'll discuss with members when I would execute to the long side or quite possibly to the short side if VIX continues to press down towards an 8 handle once again for a double bottom setup. FSLR. This is an investment watch. Monthly chart. We have a breakout of this downtrend channel. A very strong week last week, up 22.5% so far this month. With the price of oil rising, that is going to help fuel, pardon the pun, the shares of First Solar and other renewable energy plays. Next chart up, NKTR, Nectar Therapeutics, another continuation breakout trade. You could see that we are holding support. We flashed a bullish key reversal on Friday. We're looking for a breakout. That will be our buy signal. Note that we do have resistance above at 24.88, so that's price target number 1. But the chart is setting up nicely. Members will be sending out an alert. NRG Energy setting up nicely for a continuation breakout. Volume was very low on Friday, so that concerns me a bit. With the shares beginning to break out of resistance, ideally you would see volume rise. That didn't happen. So while I love the price action, volume action is a bit of a concern. MSTR. This is one of those extreme oversold stocks that I just simply love to play. RSI daily chart 16.01. We are trading down below the 2 and 3 standard deviation Bollinger Bands. Now you'll see that we rallied off the lows of the week last week. Is it any wonder or surprise that that bounce occurred right where there was prior support going back to 2014? Where do we close? Above support going back to 2016. So these historical charts, meaning using the weekly charts, monthly charts to identify where you have a great risk reward entry point, can no better be illustrated than on this chart here, MSTR. This is a short-term swing trade to the long side. We will not be staying long in this trade. Next chart up, KMDA, Kamada Limited. This is a daily chart, another extreme oversold stock with RSI 15.94. We are trading down below the 2 and 3 standard deviation Bollinger Bands. In short, folks, when I show you these charts and talk about the 2 and 3 standard deviation Bollinger Bands, in short, it's not supposed to be there. Relative to prior price action. Does that mean that you buy it simply based upon where the shares are trading relative to the 2 and 3 standard deviation Bollinger Band? No. All they need to do is trade sideways for a couple of days and they're back above those bands. But when you take into consideration RSI being at extreme oversold levels and the fact that you have the 50-day moving average ready to cross below the 200-day moving average, you may be saying, Bob, that's horrible. That's a death cross. The snake oil salesman on CNBC tell me all the time, don't buy a stock when the 50 and 200-day moving average cross below each other. Don't you think that that's priced in right now, folks? And if you ever look at the charts as much as I do, you'll know that after you get that bearish crossover, normally you get a rally, a relief rally in the shares. That doesn't mean it's going back to all-time highs. It's probably a dead cat bounce and a roll back over and make new lower lows. So don't take me wrong here, but this chart here, while there's reasons to be concerned about more downside risk, I see more opportunity than I see risk. As long as you use a disciplined approach that I teach my members, you'll be fine, you'll make money. Now, take note of a very bullish setup here on stochastics. We flashed a double bottom setup last week on Stokes, and we broke out. Looking at this chart, you would think that there's nothing bullish about the shares, but there are some bullish reasons to get long of the name. Now, one reason why I probably won't be long on Monday is volume. Huge institutional distribution on Friday. We don't want to fight these guys. They are dumping. They are hitting the bid. Just avoid them like the plague. Let's let these volume bars dissipate. We'll watch the 2-hour chart on an end-of-day basis, meaning the market's closed. We could sit back and take a look at the charts without having any emotion, any stress of having to execute a trade like day traders do. I am not a day trader, nor do I want to be, because I'm not a good one. And there are many good day traders out there. It's simply not my forte. I like reviewing the charts after hours, putting some commentary together for members so that we have a game plan going into the next trading week and the next trading day. Now, again, going back to historical price action, we bounced right off of historical support going back to 2016, and right before it became support, it was resistance for a number of years. So we'll see whether or not this support level can hold. If it can't, we're going to see probably the high threes on KMDA. So members, more to come. Next chart up, BIDU. All right, so I am viewing BIDU. Let's go to a daily chart first. I am viewing BIDU as a short. Why? And you may be saying, you know, you're nuts. And that's a fair statement to make if you are a technician and you're looking at the charts as I am. Fair enough. I am bearish on the charts in the very short term, meaning we have BIDU that is trading with RSI near 87. It is trading above the 2 and closed above the 3 standard deviation Bollinger Band. Folks, it's not going to stay here much longer. We will get a pullback. And on that pullback, if you're nimble enough to scalp a profit, good for you. But I would not stay short for very long. And this is where I'm going to segue into my bullish commentary. And my bullish commentary has nothing to do with BIDU longer term. Forget the daily charts. You need to take a look at your weekly charts. And in this case here, BIDU was in an ascending wedge formation since 2015. And 2 weeks ago, we broke out, and last week, you just had the shorts get crushed. And plus, you had institutional distribution. Where did sellers move in? Right where there were buyers before at that level back in 2015. You have traders, institutions, but the small investor that have been sitting with these shares since 2014, 2015, waiting to get their money back. They saw the opportunity. They didn't want to make a profit. They just wanted that red entry on their trading platform to turn green, flat, get me out at the best price, and they sold into strength. Now we're going to get a pullback. And on that pullback, I will become very bullish, and I will be sending out an alert to members. We'll be doing a lot of analysis on many of these charts in the coming week and weeks. And that's it for this week, folks. If you're not currently a member and you want to become a member, enter your email address. We'll treat that as an expression of interest. We'll send out an email when we have it open in enrollment. For new members, the target is 750 members in total, 250 gold, 500 silver. And also when you enter your email address, you will not be spammed. Trust me when I say that. You'll get some free trade tutorials as well as best stock charts to your inbox, in addition to some in-depth trade reviews of how we executed some of our trades. Amazon, we've traded twice in the past couple of months, made some really good money on it. I will go into greater detail with our trade of Amazon. Don't miss it. Get it to your inbox. So again, enter your email address. We hate spam too. Members, let's segue into the week ahead commentary. Everybody else have a great weekend. Be well.